All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for another market bias update report for Sunday, October 27th and the trading week ahead. Starting right off, as always, reviewing trading from last week. Ended up having 7 wins and 7 losses, 12 total trades. Ended up having just a small loss, lost about 2,655 for the week. And just couldn't quite get my timing down. The market was a little volatile, had a couple of times where it threatened to break support and tapped me out of a couple of trades, only to reverse back and get back up above moving averages and support levels. But overall, just a choppy week. And honestly, I'm glad to have gotten out of it for the small loss that I did, just because the price action was quite variable and it was hard to get a solid read on the market last week. So with that, let's dive out and check out the trading week ahead. First off, starting off on the S&P 500, we, like I said, did break down below our moving averages a couple of times last week, came back above, got Friday a hammer candle or inverted hammer candle, excuse me, that was threatening a breakdown on slightly larger than average volume. Our MACD was rolling over, our RSI had lost bullish momentum and was just kind of hovering in the middle of the bullish range, but not increasing, which we want to see. And then today on Sunday, we've gotten a nice little green candle, gotten back above both of our moving averages. I am not going to be super surprised here if we see the S&P basically just trade in a range between 5,800 and up to about 5,927 is the previous high. We only have about 6 trading days or 7 trading days until the US elections. And I am guessing that the market is going to be pretty hesitant to do a whole lot between now and then. So my read for the market is probably just a neutral-based outlook for this week. Probably a little bit more choppy, a little bit more volatility than weeks we've had previously, but for the most part, just staying in that trading range. Going out to the Nasdaq does look a little bit better to me. And if we go out and look at it, we did end up having kind of the same breakdown, same volatility, actually a little bit worse on the Nasdaq originally than the S&P back on the 23rd of last week. We did end up recovering and we are back above all moving averages and closed above all moving averages on Friday, which is really important. This to me looks like we still are trying to line up this trade to break out over the little consolidation that we've had over the last 2 weeks around 20,700. And if we do break above that, it seems reasonable to me that we might try to push back up to that 20,983 level, which marks the all-time high on the Nasdaq. And that might happen between now and elections. I'm a little bit more bullish on the Nasdaq than the S&P right now, just because it looks a little bit better in terms of the actual price chart. RSI looks pretty much identical, but the MACD to me isn't curved over and heading lower as hard. It is stabilized and just kind of flatlining here slightly in the positive. So I have a slight higher bullish ranking for the Nasdaq versus the S&P. Going out to the Russell. Russell, honestly, probably just going to continue to do some chops similar to the S&P. It did break down below its 20. Its 9 moving average is threatening it to break down below the 20. Its RSI found the 50 line, which is neutral, and started to bounce and curl up. We would have an interesting trade here if we can get back above Friday's candle high at 22.52 and 20 cents. If we break above that 22.52, let's just call it 22.53 level, that would just be a bullish retracement and it would probably push back up to that 2300 level. MACD isn't looking super great, but it's still holding slightly in the bullish territory. Again, RSI is just kind of bouncing off that 50 line, barely in the bullish territory. Going out to the Dow Jones, it broke down a little bit heavier than the other two. You can see steeper decline here in the MACD. MACD line actually crossed into bearish territory on it, and the RSI, even though it is barely holding in the positive line here above 50, it is barely holding on there. Wouldn't be surprised to see this just chop back and forth between 43,000 and down to about 42,000, so about 1,000 point range. Likely going to just chop around in that for this week. And then after elections, based on the elections results and having that uncertainty past us, I wouldn't be surprised for some extra volatility to come in at the beginning of next week, just before elections on Tuesday. Going out to Bitcoin. Bitcoin has been interesting. Overall, still bullish. I think that this is continuing to set up to break out. I am not going to be surprised at all by a direction in either move. I am positioning myself for a bullish breakout and trying to move back to all-time highs around 74,000. With that said, have had some significant candles here to the downside come in with a little bit extra volume. The MACD is slowing down. RSI is still pushing in the bullish territory, and I do think that the longer we consolidate here right underneath that diagonal resistance line in red, the better that breakout is going to be, pushing back up towards all-time highs and beyond. So again, slightly bullish read, but might take a little bit of time here. I won't be surprised to see that breakout above that diagonal resistance line, however. So am bullish on Bitcoin. Ethereum is fighting at the lows here still. Not a fantastic read. My only read on Ethereum is that if Bitcoin does break out to the top side, it will likely pull Ethereum up. And in that case, we are likely to come back to retest this diagonal resistance line somewhere just shy of 2,800. So looking at a secondary trade on Ethereum if Bitcoin ends up breaking out, but not really interested in Ethereum, honestly, unless Bitcoin does make its move. Going out to gold, had a little bit of volatility on the 23rd, along with the rest of the market just selling off basically in everything sell day. Since then have stabilized and just kind of hanging out on the 9 EMA. Nothing really to say here other than it is holding really, really well given what has been going on in yield rates and also the US dollar. I am actually surprised that gold has been holding up as well as it has in this environment, and we will touch on the US dollar towards the end of this. Going out to silver, pretty much same thing as gold. It has pulled back, held on the 9 EMA, gave us a nice green doji, but we have not gotten confirmation to the top side yet. Our MACD is rolling over and threatening a little bit of a bearish cross, though still in bullish territory. And the the RSI, excuse me, is pushing into the overbought territory. With that said, any push above the high here of Friday's candle, which was 34.20, I will be looking at that as a bullish play, looking to go back up to 35 and then potentially beyond. Going out to copper. Copper, you can see here, I actually have a trade on already. This one I let go over the weekend. I'm basically just stopped below the wick low of this consolidation zone and looking for a move back up to the previous pivot high. Ended up getting triggered in on the volatile candle here on the 21st and ended up not holding that. I did do an intraday trigger that I decided to go ahead and hold and turn into a swing trade instead of a day trade. So currently I am already tapped into that position just for full disclosure, and I am looking for that to go back up to 465 or beyond. Going out to Palladium. Man, I am a little aggravated that I missed this break on Palladium. I had been watching for this little ascending triangle pattern to develop and finalize itself for quite some time. Basically, ever since the 11th here, had been watching that thing. Ended up getting a couple of different fake outs, and I actually got in early. I did a little pre-front running here on the 17th. Ended up taking profit on the 18th, and then it sold off, consolidated for a while, and I just simply missed that breakout there. Unfortunately, ran way too hard and way too fast to try to chase afterwards, but did end up missing that nice big run of almost 10%. If we back this out to a weekly time frame chart, this still looks really, really good. Not for a swing trade because it is wildly overextended on the short-term charts, but this reversal pattern looks really, really nice to me. And I do think that we are going to see some significant price appreciation in Palladium in the months to come. If we drop this out to a monthly chart, you can also see the really nice bottoming pattern here. Held support really, really firmly over the course of basically this entire year so far. Just got above its 9, its 20, and its long-term 200 moving averages and just has open air above it. I will not be surprised to see this pump all the way up to around 1,500, which is a really nice move in Palladium. So dropping back to the daily chart, any secondary pattern, any bullish retracement we get, any high base, any flag-based pattern that we get here, I will be really, really interested to play Palladium. Going out to Platinum. Platinum, a little bit less interesting to me, honestly. It just has a lot of chop. If we toss this out to a weekly chart, you can see that it is trying to hold above all of its moving averages. If we toss this out to a monthly chart, you can see that while we still have a kind of bottoming pattern here, it is much, much messier than Palladium. Palladium just looks so much cleaner to me. Juxtaposition this chart to this one here and zoom in, and you can really see the cleanliness of Palladium versus the chop of Platinum. So I am not super interested in Platinum right now. If I am going to play in this space, it is definitely going to be Palladium instead of Platinum. Going out to crude light, ended up gapping down here over the weekend and just could not get back above the important moving averages here that are all overhead. I do have a alert set for me to let me know if it gets back above the 20 SMA here, the blue line on the price chart. But the MACD is looking gross. RSI is gross, obviously both in bearish territory. And the MACD is signaling here that it is actually picking up steam to the downside. If we toss this to a weekly chart, you can see we are below all important moving averages. This has some work cut out for it, and I am not going to be interested in really anything on crude light except for maybe shorting if we pop back up to this resistance zone again. Finally, for our futures, going out to natural gas, had a nice bounce off the 200. Now just doing a little flag-based pattern. Not super interested in it until it breaks back above 2.59. But if we do get a break back above 2.59 or 2.6, I will be interested in playing this to the top side again and probably targeting back up to around 2.9. Even though that's only a 30-point move on the actual futures, it is a significant gain or loss perspective for one contract on the futures market here. So keeping an eye on this. Not convinced yet, but I do like the constructive nature of the RSI. It got oversold, has crossed back out of that, and our MACD got into the bearish territory and is fighting to try to reclaim into bullish territory on that. By the time we break above 2.6, that MACD will have cleaned itself up and gotten back to bullish territory. So I'm keeping this one on the radar. Finally, when we were looking at gold and silver, I said we were going to go out and look at UUP, the US dollar index, and man, this thing has just been on a relentless tear, and this is why I am actually really impressed that gold and silver have both held up as well as they have, because we did end up breaking above this really important resistance line just around 29.20 last week, closed above it. If we toss this out to a weekly time frame chart, basically, this just shows we took out that high, we set a new higher pivot low, so that is now a series of higher highs and higher lows, and we are probably moving back up into the 29.63 level into this longer term diagonal resistance. That will be a very important battle, not only for the US dollar, but for the larger equities market as a whole, to see how the US dollar performs there. I do not want to see it get back above that. If we do break back above that level, I'm going to start to close down my risk graphs and start to get a little bit more defensive in the overall market, because that does not spell conducive, excuse me, does not spell out for conducive market. So, basically just waiting to see what happens on that on the daily chart. But if we do get back up into that range, I'm going to be getting much less aggressive in the overall market. Last but not least, going out to our heat map. This is a 1 week performance of last week, and you can see mostly red across the entire space with just a couple of standouts. Microsoft, Nvidia, both up 2.5%. Tesla up a whopping 21, almost 22%, and Philip Morris up 8%. So just a couple of important companies holding up basically the entire rest of the market. But this, to me, is starting to signal there might be some more weakness under the surface than we are actually seeing in the broad market indices, and that caution might be warranted coming into the next couple of weeks, especially going into the important US elections. Going out to our economic calendar, we have a huge spattering of economic data coming out. Nothing on Monday, but Tuesday, Wednesday, Thursday, and Friday all have multiple reports coming out. Not going to list out all of them right now, but out of all of these, I am most interested in Thursday for the core PCE price index and unemployment claims. And then secondarily on Friday, interested to see what the ISM manufacturing comes in. Not really worried one way or the other about consumer confidence on Tuesday and JOLTS job openings on Tuesday. So that's kind of a nothing burger to me. Wednesday, kind of a nothing burger. It'll be interesting to see, but I don't think it's going to impact the market strictly one way or the other. But again, Thursday, Friday, be very cautious and make sure that you have defined risk in your trades. Last but not least, going out to our target rate probabilities for 7th of November, the Fed meeting on November 7th, excuse me. And basically the entire market at a 97% confidence rating is expecting 1/4 point rate reduction for the Federal Reserve. So we'll see if we get that, but that is what the market is expecting right now. As always, guys, trade safe. Let me know if you have any questions. Hit me up in the comments, like, subscribe if you haven't already, and please share this. Helps me get the word out and help other people with their financial markets as well.